Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today's the 4th of March 2019, so welcome everyone, welcome to this Monday's morning session. So I hope you're all feeling nice and relaxed after the weekend. So yep, let's jump into a new fresh one. But before we start looking at the charts, as usual, let's have a quick read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, let's quickly jump into the charts. Now the first one I want to touch on here is Nikkei. Now I was covering this one last week. Basically I was telling you to watch this little box, this little range that we saw Nikkei trading in. And you can see that on well, today actually Nikkei managed to break through the upper side of it and managed to close the trading session near this little level of resistance that I've also mentioned, around the 21,875 level. So you can see that how well this played out as a nice area of resistance. You can see that previously it also acted as a good area of resistance, especially on the 13th of December. So of course this is where we're going to keep on monitoring. A nice good push above this could of course lead this one further up here, initially of course testing the psychological 22,000 and then maybe the 22,225 level. And just to show you what that level was here in the past, and the 22,225 area was marked here by the inside swing low of the 29th of November. So keep your eyes on that one, guys. Very good potential area of resistance. First one of course only if we see a break above the 21,875, but for now we're going to keep it slow and simple and easy. And because if, let's say, this struggles to overcome the 21,875 level, of course don't forget that we could see something of like this, where we could see maybe a bit of a retracement back down, maybe a retest of this upper side of this little range that we saw the index trading in. And if it fails to drop back inside it, then yep, we could see more bulls jumping in here and potentially driving higher. And this is where we could target this, or should I say, could keep a close eye on the 21,875 level, because like I said, a nice good break above that could mean that this wants to continue traveling further higher. Of course it would confirm a forthcoming higher high, and yep, the 22,225 level could be the next one on the radar. On the downside, well, if this suddenly drops back inside the this little range, of course we're going to be a little bit more on the cautious side. If this decides to exit this little range from through the lower bound of it, then well, the next thing that you need to keep an eye on is of course this little short-term tentative upside support line taken from the lows of the 26th of December. And of course this could provide some support, initial support, but if the selling is going to be strong, then yep, a break below this could drag this one lower. So in a way, you can see by the arrow that I've drawn here, basically this is the bear scenario that we're keeping a close eye on. If we see a drop below the 21,000 level, now this is where we will shift to the downside and we'll start looking at much lower levels. So that's why for now, guys, certainly the downside is slightly off the table, and let's see how this level right here, the 21,875 level, performs. If we do get a nice push above that, then yep, let's aim for higher levels. Jumping into gold now, this one is a very interesting one, because last Friday we saw this one selling off heavily, and well, now it's kind of it managed to also drop below the psychological 1300 level. Now I was talking about this one in my one of my videos on Friday as well, and basically we had a nice, like I said, slide here breaking below the 1302, and not only that, breaking below the 1297.50 level approximately there, marked by the lows of the 28th of January. So of course this doesn't look very positive for gold. We could see a further slide lower. Now of course don't forget, we could see a bit of maybe correction back up here, but if it struggles to get back above the 1302 level, now this could be another a potential good area for the bears to step in and drive this one lower. So that's why, guys, for now, be very cautious with this one. It could in a way not do the retracement. It could travel further down and hit the 1286 level that we were watching here. Now that 1286 marks the highs of the 23rd of January, and also the lows here, the 15th and the 11th of January. So very good potential area of support. This one 1286, 87 approximately there. So that's why, like I said, guys, for now you could keep an eye on this level, because if we could see this one traveling further down, this is where the hold up could occur, and maybe here the retracement could start back up here. So that's why for now it's a bit of a tricky one. On like probably we're just going to continue monitoring the levels. In terms of the upside, well, again, like I said, a nice good push above the 1302 could be that gateway towards slightly higher levels. Don't forget, we're going to be still trading below this little short-term tentative downside resistance line taken from the highs of the 20th of February. So in a way, if this continues to travel further up here, still it could get held here by this downside resistance line. And if you want to look for something more of a from the medium term perspective, wait for a move back above the 1321 level, and only then target higher areas. So for now, or even 1315, could be that 1316 level could be that nice area to start watching for the upside. So that's why, guys, for now be very cautious with the upside. We could the only upside that we're considering right now is just a correction. So let's see, where is that going to happen? If this is going to travel lower and test the 1287 level first and then correct to the upside, or will it correct right now and then fail to drive above the 1302, and then we'll see this one traveling back down again. So these are the scenarios that could be possible. Certainly for now, overall we're still more bearish than bullish on this one. Jumping into euro dollar now, looking at this one, and I was talking about this pair last week. Basically, I've mentioned this one, and I've mentioned this upside support line, this tentative upside support line that that continues in a way to play out, and you can see how well this is kind of balancing around this line, basically underneath it. Of course, it tried to overcome it a few times last week, but kind of failed to do that. Also, of course, the 114 level, that's what we're watching as well, because that continues to act as a strong area of resistance. So in a way, basically, for us to start considering higher levels on this one, we would like to see initially, of course, a nice good push above the 114 level, and of course above this upside support line, and only then we will target higher areas. So for now, the only thing is that you also need to, what you need to keep an eye on is, of course, this downside resistance line taken from the high of the 10th of January. Now, if we do see a nice good push above that downside resistance line, this is where probably even more buyers could start joining in and potentially pushing this pair further up here. This is where we will target the 115 level then again. Of course, for now, guys, it's very tricky to talk about the upside given the fact that it's still struggling to overcome the 114 level. In terms of the downside, well, you could start looking at, of course, initially I had this level right here, the 113.65, but to be honest, now we could a little bit lower it down just to be on the safe side. So the 113.50 level could be that little gateway maybe towards slightly lower levels. This is where we will aim for the 113.25 or even lower. So for now, guys, this is what you could do. This is what you could keep a close eye on. On the upside, of course, keep a close eye on the 114. We need to see a nice, good, clear close above the 114 level and also above the this upside support line. But on the downside is the 113.50 that we're going to be keeping a close eye on. A nice, good break below it could, could test the 113.25, and then we'll just take it from there. Of course, if this fails to withhold, then further declines are possible. EURGBP, now this one is an interesting one. As also last week I was talking about this this little range that and especially that was on Friday when I was talking about this little range here where the pair kind of got stuck, and of course on Friday we had a nice pop here to the upside, managed to reach the 0.8620 level. This is where it hit resistance, and then from there it slid back down, but as you can see, continues to remain above this 0.8585 level. So this is going to be very interesting to watch, because if this drops below the 0.8585, so we could see a further slide lower. The only thing is, don't forget, this could be another good potential area of support as well, the 0.8565, and that's why we do have the arrow here below the 0.8565 level, because a drop below this could potentially confirm a further move lower here, where we could retest the February lows near the 0.8530 zone. So but if that fails to withhold as well, I mean, then the pair would confirm a forthcoming lower low, and we could see this one driving further down. So for now, probably the main thing is to keep an eye on the 0.8585 level. If we see a rebound from it to the upside, that's great, but to be honest, for us, in order for us to get more comfortable with the upside, we would like to see a nice good push above the 0.8620 level first, and then we will target higher levels, because this could be just also moving sideways around here, and this could be pretty annoying for the traders. So that's why, guys, for now, keep your eyes on these key areas that I've mentioned, and let's see how that plays out. And the last pair I wanted to quickly touch on, and that was USDCAD. Now USDCAD on Friday had a nice push. Of course, the CAD devalued slightly due to the Canadian GDP, annualized GDP figure that came out quite, should I say, well below expectations, and you can see this nice effect here that the USDCAD had, and pushed higher, broke some key resistance levels. So basically, of course, I still want to mention that this is what's holding it from dropping lower, what's holding the pair from dropping lower, this upside support line running from the 1st of February last year, and but now you can see that how well it managed to push higher and break one of our key resistance levels, which was this one around the 132.45 level. So a nice good push. This is what I was talking about. Basically, a nice good push above that could lead towards further higher levels. Of course, it managed to break also the 132.80. So the next one that we're keeping a close eye on is of course these highs that we saw here back on the 15th of February and also on the 7th of February. So the 133.30 level, this is where we're going to be keeping a close eye on. Basically, a nice good push above the 133.30 could be opening the path towards higher levels. This could confirm a forthcoming higher high as well. So of course, keep your eyes on these levels. Like I said, the one that we're going to be keeping a close eye on today is the 133.30. Now, don't forget, we could see also a bit of correction here to the downside, but if it fails to drive below the 132.45 level, this is where more bulls could step in here and drive this one higher. So in a way, we could see something like this, basically, where we could see a slide lower and then a move towards the 133.30 level. So for now, guys, that's why I keep a close eye on it. If this suddenly drops below the 132.30 level right here, 132.45 level, if it drops below that, then yep, we could see maybe a bit of a decline here towards the 132 zone. But if that fails to withhold, now this is where we could retest this long-term upside support line again. So So that's why, guys, for now, be very cautious, keep a close eye on some of these key support and resistance levels, and let's see how this plays out. Yep, let's see what this day is going to bring to us. But for now, of course, on this pair we are more bullish than bearish, but don't forget we could see a bit of a slide here lower and then a push higher. Okay, guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me today, later on, at my Traders Tea Time, and that's 14:15 GMT time. But for now, I hope you have a wonderful trading day, and I'll see you later. Bye-bye.